Hello, welcome to the end of week review for this week, and this week is the 36 week 36, and we are still in uh, September. Right? This week we just finished this week. That's the first trading day of this month, and September is the end of quarter three right there. So we have 1, 2, 3, 3.5 more week. We're gonna close up the Q3. And for this week, we only have 4 trading days. So it's very special week, and we can see that a lot of price actions, very beautiful price action that is somewhat easy to trade. So this week is like a it's like full opportunities, and we did take an opportunity. We took 2 beautiful trades. One of them is so beautiful that we blow up our account. We will show that trade later on in the recording, but that is the nature of the game right there. So for this week, it's a non-farm payroll week, and it falls into the holiday. That's why only 4 trading day is keep in mind that normally in the majority there's some exception that non-farm payroll is gonna be the first Friday of the month. Alright, so look in the daily charts. We can see we identify we want to see in the non-farm payroll week, the Monday is the one that is set the range for the whole non-farm payroll week. Monday or the first trading day of the non-farm payroll week. In this case, is the Tuesday, right? Because of holiday is Monday. All right, so we have script, and I think we put into crowd very smart. I have to write this script. So this is for this month. Non-farm payroll is for on September 2nd, which is the Tuesday. Last time it for on Monday. Last time is for on Monday, which is right there is the July 28th, the Monday of the non-farm payroll, and August 1st is the non-farm payroll. Yeah, so it identifies exactly, even though it's dynamic, but it identifies very good. So crowd is very good. And before that, that's where the range come from this Monday. And we can see that if you see that this the Monday, the range is low. So if it break, oh yeah, so it's still the case that we study. So the Monday range, it break that range and it make another move on Thursday. All right, so that is so this was also 4 trading day. That right? 7, 3. Yeah, only because of July 4. Very interesting. July 4 right there. You see that? It break out of trend and then continue right there. So. So the range of Monday give us the idea whether it gonna broke that range. You see that? Give us some idea how to trade on the non-farm payroll. So when it broke that range, then wow, this one is it's with both the high and the low, and the Friday is a sell-off. But let's give us some idea how to trade. Okay, so this Monday is okay. So the May is it go into 28 year and close in May 2nd. Yeah, that's 1, 2, 3, 4, 5. So 5 trading day in May right there. So very very interesting to see how it's. Wow, you see that it gives us a very beautiful right here. It's just it whip the high, which is the buy the buy side liquidity, and then from there you can go and see, wow, it break to the low, then short them right now. So that's the idea of look at the high time frame can give this, especially in this time in the daily. You can see that for this week or this month, the non-farm payroll, very easy trade right there. So basically you see that it break and it reverse, and you can tell that this down move is not finished, but you can look with level or on this candle range right there. You see that break and it reverse right away, test from below, break and reverse. I think this for this week, for the next coming week, I think it still go down there. It will test this level, mark this one. I think it's gonna go down and test this level, mark the run at this candle. You will see that it will test this, because this is a candle after expansion move, after a huge expansion. Then this candle gonna give us the level, so we can play with right there. So that's how we look it from the high time frame level. Okay, now go down to the 15 minutes. You see that is the 8:30 when the data release, and yep. Wow. So right there. So we try to find the setup that we see. Yeah. Yeah, mark the high level. We can see that that's from below break and reclaim or reverse right there. So we need to wait for 10, but we a little bit hurry right here and we get caught, and that's where we blow up our account again. So we have to wait for next month. It's a beautiful mistake, so to embrace it. Right, that's how you grow. You have to be celebrate in both failure and mistake, so you can grow. Yeah. So whenever you see this setup, right, 8:30, they have a lot of wick below. That means that there are gap right there, and then as soon as above that level, and it create a compressed candle right there, then wait for it break. But tricky that at 8:30 we thought that it gonna come down, but it flipped and it get off. It make us off balance right there, and we change right there, and that's where we make mistake. But I think it's a beautiful mistake for to learn. So let's look at the tips on Friday. All right, here we go. We have the tips on Friday, non-farm payroll. Let rewire. I just want to see. So move really fast. Yeah, we have to. Okay. Yes, that's it. Look at that. Okay, that is the 8:30 right there. So it's actually a down move. It want to come down, but maybe it does not have enough liquidity. You see the level right there. It break and it go back right away. That means it can reverse right there. Yep, you see that? That's the first few seconds right there, and then it flipped. It tells us that, yep, boom, come back and forth, and look at the 8:45. So, and that is at 9:15 or at 9. See that? And then you have 9:15. 9:15 will close at 9:30. Boom. So here's the 9:30. Right, and we see it flip, and then back. See that? Yeah, right here. Oh, we thought that that should be a short trade right there because it flipped, and it did not give us a setup for our setup, which is for breakout type 1 and type 2. Here's our setup that we trade. So we trade two setup right here, one on the left and one on the right. So the type 1 is on the left and type 2 is on the right, and in the top is the short setup, and in the bottom is the long setup. So in that scenario, it does not have it. You see that it's just break test from above and reverse. It looked like right there. You see that break and test from above right there, but we don't have the reference. Like if you mark this level, then we have to wait for this touch that level, the London high right here. Okay, let's take this screenshot right here. But we have the candle app expansion right there. So we try to mark the level of the London right there. You see that's the London. Level. So you see the test from low break, and if touch level, then it will reclaim or reverse. So let's see. That we going with shade right there. We thought they're gonna break, so it's okay. But then it did not, right? Because that's how the market volatile. Even though we have the right idea, the right direction, that's where we got kicked out right there. We got kicked out is the trade that we took right here. Not this one, but it's right here. We see that we take that at on Friday we try, we thought that okay, because of the 8:30, so it's already ingest enough liquidity, so we believe that at 9:30 if we're gonna move, it's gonna make the move on 9:30. Normally we wait at 10, so at 10, which is 30 minutes for the market maker try to engineer liquidity, and they're gonna make a big move on at 10. But for today we think differently. Not today, but on that Friday we think differently. We think to ourselves, oh well, we cannot engage at 8:30. I mean 9:30 at the opening bell, because it's 8:30. The critic already, engineer enough right there. So we can't deviate from our game plan. Normally our game plan we want to engage at 10, but because that's where the big move gonna make. So that's the reason behind it. Okay, so we look in the daily time frame, we saw right there. So it's gonna revisit that level, and right there, you see that right there, we go short because we know that there's a gap right here. It's gonna come down and visit this level. So we engage right here, but next time we need to give our stop loss a little bit higher right here. That's our mistake. And at that moment we also kind of nervous, right? Because we just win a very good trade the prior day. We win the trade about 5,000 because our plan that we want to take only 2 trades to pass our challenge so we can get funded. That's our game plan. And when we have one trade, good trade in the back, the second we take, we feel fear. We fear that we may lose again, and that's, I think, really play a very influential, influential part in our decision making took place on Friday, and that's the reason why we're going here very nervous, and it is what it is. But now we look back, we can see that play a factor in our decision making. So we learn from that. We should be more right here, more clarity right here. Put the stop a little bit up there. Give us the room to survive the volatility, especially on a non-farm payroll day. See that it look good, but it take it out just 1 or 2 ticks right here, and that's where it generates the emotion in us right there. We feel like, wow, that we be missing out. Look at that. The minute that we go in, we go big right here, and you know what? It come back. Can you believe that? We in the money. We thought like, wow, we should take. And at that moment, we have mixed emotion. We have to debate ourselves. So we take the profit right here, or we stay in the trade. The setup so good. So we thought, oh wow, let's stay. And that's where the magic or the tragic happened. We should give the stop loss a little bit up there, but that's where we make mistake. And now, you see that, and now we fear missing out right there. But eventually it go into our direction right there. So it's about you see that we blow up our account right there. You see we go in again, but if it just flip back to us, that is the nature of an 9:45 right there. But if we wait until 10, the move very smooth. You see 10. You look in the charts at 10, you can see. But that's how the beautiful trade, the beautiful mistake we make, and we blow up our account. We celebrate this, right? We read in the trader or the best trader, when they make mistakes, they not throw out on their mistake. They celebrate that, because mistakes and failure is not again successful. It's part of process. It's a stepstone that lead to success. So we should not feel bad. We should not feel. Basically, we should not give a negative feeling to that. Just stay positive and learn from it. Is at least it take action somewhere in our decision making process. We need to improve. Definitely, we need to be more aware of our emotion on that day. So with that, you can see that right there. Man, we have the idea, but you see that as soon as it make a high right there, boom, effect and look at the candle at 10. So right here. So after right here, what you're gonna do, because you know that right here, before that we take screenshot right there, so we have to patient right here. Test from above, break and reverse. What wait for it touch the level, then for sure we go in. Yes, it's below that level, right? So we can go in very sure. And that's where the patient is playing right there. All right, let's check this screenshot right here. This screenshot right here tells us the level that we draw before. That's the London high. It's a little bit tricky. So yeah, let's go with this. So right there, you see that test from below, break it with a gap, and then when it come back, it tells us that it gonna reclaim and it can reverse, reclaim right there, then it gonna go down. There are lots of liquidity right here. You can see that it track all the sell side liquidity, then it go down. It compress half an hour, right? It compressed at 9:30 and 9:45. Is that right? Yeah, 9:30, 9:45. Boom. Is that chance? Is that candle a chance? Let's find out. This candle at 10. No, it's 8:45. That's 9:30. 9:30 is a trap for people to go long. As soon as the 9:30 close, boom. Got a signal for it right there. You see that? It break, but it reverse. The reverse right here is trap the people to go long. But anyway, right here, you see that is a full breakout right there. So right here we should be patiently a little bit, let the setup form first, then our life is much easier. But anyway, we learn our lesson, right? We make mistake, and mistake is a seed for successful. So should not be too hard on ourselves right there. So basically we have test from below, break, and then it gonna reverse, because this is a huge move right here. It gonna reverse after do a sweep liquidity right there, and you see the wick down here, test from above, that where a lot of liquidity. So it's gonna come down, and it come down very hard at 10 o'clock right there. So let's edit this one. Edit. So that is the setup of type 2 right there. So first step we have is break, right? And we see that all the signals that it's gonna come down. You see the Federal gap right there, and a lot of liquidity, and it's just above. Above the opening. So it's a break, and then you not break, it's not break. Yeah, we mix both. Test from below. Test from below. Test from below. And then that's break it, the second step. and then you have a reclaim or reverse, right? Reclaim or reverse right here. Reverse of the second step. Sometimes we want the reclaim happen right away, but because of the timing, right? Is because if the time in this case at 9:30, we would love to see that, but sometimes not enough liquidity, so it's not gonna move right away, especially if we have a gap. So that's the reason. That is the reason. So basically we have right there. Just recap right here is a 4 breakout type 2, and in this case is a reversal, right? Because uptrend and then the last leg up and then boom, it reverses. 09:45. That's what we have, right? 9:30, and then that's the 45. We check the chart. Yes, that's the 45 right there. So first is type 2. Test first, right? Test from below and break it, and then it reclaim right away. In this case, not right away. It take another 1, 2, 3 candle right there. Yeah, the reclaim happened at 09:45. So the reason why we anticipate we going short at 9:30 because we thought that the enough liquidity right there. That's the reason why we go early, and that's where we make mistake and we blow up our account right there. So that's type 2 right there. Let's save this one. Alright, here's we put both of this screenshot together. So it looked like at 9:30, right? We marked the high of London right there, and at 9:45 you see that it reclaimed that level right there. Where that's from low break and reverse. Or reclaim right there. Alright, let's now go to the tape and keep rolling. You see the 10 is really come down real hard, and the red is story with the history. So you see that it break high time frame level right there, the daily right there, and it continue. So we make the Huron right there. So that is the nature of the game right there for us. Right, we know the direction. We learn ourselves. So next time we learn that the upglow candle right there is just a trap, and as soon as it rate the high or the buy side area, it flip right away. If we mark the candle after expansion, it gives us some clue right there. If this at a retracement, then wait until it's break above that. But if it is at a top of the last leg up, then we can go long as soon that this one break. So that's another last hill lesson run right there. Right, if it's in the retracement like right here, you wait for this above level and short them. But if it's already on the top or in the bottom, you may not need to, right? You can pull the trigger, especially when we apply the times at around 9:30 to 9:45 to 10. That's a critical time right there. We can short them without any hesitation, especially you see the fairly up right here, and you see a long wick right here. That means a lot of liquidity out there. So that's the hill lesson we learned for non-farm payroll. We did develop a non-farm payroll case study last time, so we have some write-up right here. So if the 930 is mentioned, right, in some condition, another condition, then the 930 is gonna be a continuation on it, like up or down. Otherwise, other condition, then 930 reversal. So in this case, the 930 is not really reversal, but it attract. It looked like it's gonna go up, but it attract, and then boom, the reversal happened at 9:45. So we need to add in this case the reversal happened at 9:45. So sometimes we have to wait, right? So here's another case study for us right there. In this case, we have another L right here. In this case, other condition, and it leads to 0945 is a reversal. So for some reason we anticipate, that's the idea right there, that's the new condition, because from our previous study we anticipate the 930 gonna be a continuation or gonna be a reversal. But in this case, the 930 is a engineer liquidity and lead up to the 945 reversal. So we have to watch. It's not gonna be a concrete condition for us right there. In this case, the 930 is also you can say a expansion, right? Then the 945 it reverse. Let's see, continuation. It's not make let up in this case. It's just a up close candle that trap the buyer, and then the 930 is reversal. So now we add another scenario in here in our non-farm payroll right there. So in this case, the condition we see is that condition. So we see the 830 is a up close candle, but have a long wick. In this case, is just test from above, so it varies right there. That condition. So right here we can say 2, and in this case is the 3 condition right there. And the other condition that we are put the holder right there, right, not a close one waist, and the 8, the 930, the 915, first the 915 is a down close candle. Then we have 0930 is up close, candle where it sets the the bull trap right here, trap you to go long right there. And then we have 0945, it's gonna be a epic reversal, plus the flush down par at 10, because have so much liquidity. When it flush, it really run. In this condition, it's called low resistant liquidity run. That's the term that ICT do right there. So this is another thing we add right here for our non-farm payroll, and this is happened on September 5th, right, last Friday, 2025 is Friday, where we see that condition. Yeah, so it's not always happen right away at 9:30. In this case, it happened at 9:45, and that is where we learn. We thought that like happened, so we go early at 9:30, and we got caught. Now look at the last time. Let's go look back at 90 day and go to August 1st. When will we see August 1st? So August 1st, where that's a non-farm payroll. That's right, August 1st. Okay, so right here. Yes, this is August 1st. That is, you see that? You have to depend on the subject. Look at 8:30 and look at 8:45. You see that? And look at the 9:45. 9:50. It took a setup for the flush at 8:30. So that's why we going early to this week, because we thought that we're gonna miss, because we thought that liquidity enough already. At one point it looked like, you see that, we look like the 9:30 gonna come down, but it did not. It flipped up, it trapped more liquidity, and boom, it flushed down. Yeah. So that's what you see right there. But right here you see the London right there. Wow. For this week, it up here on London. So the London low for last time is a setup short term. In this week, the London high is set up to short. See the London high right there? So it break the level, that means red rally and shorter. That's what we see from last time, right? Last time we see that the 9:30 flush right away. It happened at liquidity, but in this case, this week non-farm payroll, the 9:30 have not been flushed. If reversal flush at 9:45. Okay, let's look to another one that happened on July the 3rd. To see another non-farm payroll, July 14, 6, second, all right, third right here, 4 right here. Yes, so 8:30 is see it relief right there, and look, man, it's so beautiful. The next 3 candle you see is still in this range, but for this week, yeah, I think we have to see this week the next couple of candle it broke out at the range, the high range right there. That means the the rally is all the exotics. But if it stay in the range, then it still have move, still have more liquidity to move up. You see, 845, 950 still the range up to 930. So I think we need to add the condition right here. It's okay to see the range right here, but I think the key is that is the candle range theory of the 0930. Yes, that's so obvious. Yeah, go back to the non-farm payroll, the month app before last month, right? That is, it happened on July the 3rd right here, and you see that the 0930 candle range right there, mark the high and mark the low. It gives you the idea that yeah, you mark the high right there, the low right there, and now you mark the high. You see that? So that's right. And you see the following candle after that, before 930, where is that candle located? They all in this trend. See that? They all in this trend, and they all test from below. Only this one is test from above, and the rest is test like that. That means that it's set to go up, right? You see that it's set to go up, so we can go long right away. Yep. So the candle range is the one we need to observe, not forget about the other one. Candle range, that's the key right there. So if the 09, 08, 45, 08, no, 09, 10, the next following candle, like 9, 09, 15, all in the range yeah, all in the range of the 0830, then anticipate a next leg up, right? Next leg up or down, vice versa, right? Yes, neck leg up and neck leg down. All right, if this all three candle all right, all this candle in the range, this is then it will be out of the range of 930, then anticipate a reversal. Yeah, but we have to put another detail, 0930 or 0945. And you remember this week it happened at 45, not 830. But if the 930 it also in here, then the reversal is very fast. All right, if the 0930 if not a reversal, yes, then not reversal, yes, then the reversal at 09:45 if very intensified right there, or IC system we call low resistance recurrent, that makes it move very fast. Yeah, very intensified. That's what we saw this week with non-farm payroll is right there. Yes. So looking for the candle range sets at at 8:30. Like last time, okay, hold on. Let's take this screenshot. So yep. So right here is the CPI July. Yep, that's what it is right there. You see that? Let's take the screenshot. So that is our case study for non-farm payroll. Here's the one on August 1st. It looked like not moving much on 8:30 right there, but at least you see it test from above a lot right there. That can give a signal that that's a bearish signal right there. See, that's the candle line right there. So look like you see that the setup right in 9:15 test from above, boom, it can break. But look, listen, also look like it tests from below, and this guy supposed to go up, but it flip to the outside right there. So let's take this screenshot also. So next time we know exactly what to do. The more we practice, the better we are. I'm from, this is August at 8:30 right there. It can give us some idea right here because it's the first leg down, and this is just gonna be the next leg down right there. But for this week, it's already leg, like up retracement, not like up and then reversal. So looking for reversal right there. Let's take screenshot. Alright, so we're good for the non-farm payroll for now, right? Good for the non-farm payroll for now. So if those into the range, then look for neck leg up, leg down. You see, it's into the range, and boom, neck leg down at 9:30. If the 9:30 is still in this trend, then boom, the next move gonna be huge, which is happened on this week. Yep, on this week. You see right here, the next move is so huge right there. and the rest is the history. Okay, so now go back to another trade. We only take 2 trades this week. Took another trade. This is so beautiful, and I think it's on Wednesday. Yeah, and look at the trade we took on Wednesday. Is that right? Yeah, no, actually Tuesday or Wednesday, September 2nd. September 2nd. Yeah, it's Tuesday. But wonder, let's see. Yeah, we didn't take any trade on September 2nd. We just observe, and I think we did take a trade on September the 3rd, which is a Wednesday. So right here, that what do we see right here, right? We see the level, the open right there. So it's test from above, break and reverse. That is our idea. So we go long. All right, so we go long, and we're very confident that that's why we move stop loss a little bit below that. We should do the same for the second trade where we blow up our cow. We should move up a little bit right there. But one of the reason that we already mentioned that because we already have with one big winning trade, so next trade we're very nervous because we fear of losing. But this is in this trade we don't have that fear. So that's one of the reasons sometimes the emotion really cloud our judgment or our decision making with that. But anyway, we do very well on this one. Okay, so boom, it take out. That's good. But you see right there. Then from here, it take it out, but it give us a very good idea here. Right here, what setup we see right there. Break is test from below. Look at how beautiful test below. There's no wick below here. That means there's no sell side liquidity. Then it's gonna explode. We know this setup. We load up right away at 10-hour contract, and look at that. It hit our target beautifully. See that? If we let it hit, it will go all the way there. But you know, with our aim, it's just 4,500 because you want to pass the trade, the challenge for 2 trades, then have to split 50-50 right there. But that's the first beautiful trade we took for this week right there, and the second is the one we plowed. They're both beautiful. They're both beautiful. So if you look on the Wednesday, right? Let's go look at on the Wednesday. Let's see what happened right there. So here's the tape we have on Wednesday recording. You see, explosive. Yes. And look, it's gonna take out the liquidity up here. So if we stay, we can have more profits. Boom. Right there, it take out. Then it go a little bit high and then it reverse. So you better take liquidity, take the profit up there. Otherwise, we're gonna get back. Yes. Yeah, I think. Yep. Let's see. Yeah, so you take the low rate there. Alright, so that's our second trade. So we take two trade, beautiful trade this week. One on Wednesday, go long, and the other one we go short. But our execution is so good on Wednesday. On Friday, the non-farm payroll, it kind of volatile, and we haven't seen that before. We thought that the 8:30, the 9:30 is where it going and it reversal, but in this case it did not reversal. Right at the 9:30, it raised like 5:45. So we anticipate direction right, but our execution a little bit, the entry a little bit too early. That's the reason why we fell. We blow up our accounts. We wait for next month. And let's see what else we learned for this week. Yeah, let's see. So here's the charts for the September 2nd, which is the Tuesday. The first trading day of this week is Tuesday because Monday is the holiday. But the Tuesday it really moved very good, because if we look on the daily, you see that the range right here, the candle after expansion give it a very good range to play around, right? So you see it go above that range and then reverse right away. Then on Tuesday we anticipate it's gonna follow up, right? The first down close it's gonna follow up because it's gonna break the level or retest the level, and in this case go all the way down here on Tuesday. And you can see that. Let's go back to just last Friday. So right here is the Tuesday. It's so easy to trade. You see the first move at 9:45, and then boom, right here you have this level. You see that? That's from below. You see that? That's from a break and reversal at 8:30 right there. You see that? That's give us a huge setup. I think we do have that. Yeah, it's been 45. Do we have a write-up for that? Then we should do the write-up then. Let's do this write-up and then we can wrap it up right there. So first week of December we have a lot of beautiful moves. In this case is 9:30. That's right, it's the 9:30 range right there. And we can just copy this, the range right here. We already see that's the first leg down, and then right here we're gonna make the last leg down, and you see that it's at the range right there, 9:45. Yeah, 9:45, not 30. $45. So what you have right there, test from low, break and reverse, and the reversal at 10:30. So that is a type 2 for breakout right there. And in this case is what is a continuation. That's right, continuation on a downward right there. Is the last leg down. That's the right up fork right there. So you have what? You have test from below right here. And you have a break right there at the 9:30. No, not 9:30, it's 10:15. And then you have the reversal happen at 10:30. Yeah, let's do the write up for this one. So it's so clear, so obvious. The market tells us what it's gonna do below. And then the second move you have is break it, and the third move is reclaim right away. Reclaim, that's a beautiful word. We usually call it reverse, but now because the reverse can be you can call reverse, but we want to keep the reverse in the trend right here. So right here it says a retracement and then the neck leg down continuation. So that way we don't want to keep you the reverse resistance. 4 breakout type 2, and in this case it's a continuation, right, which is the neck leg down right there, continuation, and that is a neck leg down at 10:30. So looking for the query sweep or run at the 10 or 10:30, depend. So first you have the test from below, and then you have breakage, and then you have a reclaim. In this case, the reclaim happened at 10:30, and this is a continuation. Like we say that the type 2 likely happen in the continuation, and the type 1 is happen on the reversal. So that's the whole idea. Alright, we just save it and we call it 4 breakout type 2 continuation neck leg down, and it happened at 10:30 and it happened on Tuesday right now. Beautiful setup. Anyway, we run out of time. Thank you for your time and interest. We're only grateful for this opportunity. We do what we love, and success coming our way day by day, little by little, and in every way we getting better. Everything is working out for us all as well. So failure or mistake we make, it's a seed that we plant, and success is invaluable for us, right? Have a wonderful night and see you next week.